Well, markets are moving higher as the U.S. and China have agreed to a 90-day reduction of trade tariffs. But how should investors be viewing this news? Joining us now to discuss is Christian Medeiros, Vice President, Director, and Portfolio Manager for Asset Allocation with TD Asset Management. Christian, thanks for joining us today on what is a big news day again.
Yeah, thanks for having me.
All right, so markets are rallying on these fresh developments on the U.S.-China trade front. Why don't you walk us through what's happening right now?
Yeah, so here's what happened. Over the weekend, Treasury Secretary Scott Bessent and Representative Greer met with their Chinese counterparts in Geneva, and they were there to discuss the trading relationship and what to do going forward. Overnight, we got a joint communique, which is always very positive news if both countries are willing to issue something in tandem, and it announced very substantial tariff reductions for 90 days. So the tariffs on China on average will now be about 30%, coming down from 145%. And the tariffs China's charging on the U.S. are now going to be about 10%, while they're also dropping some non-tariff measures that they announced. So this is a big reduction in tariffs versus what the market was expecting from this weekend's meeting. What this means is it's important to contextualize where we were coming in. When we listen to logistics experts, retail experts, they all believe that a lot of the buying decisions for the holiday season needed to take place in the next month or two in order for the shelves to be stocked for the holiday season and back to school season. We also knew that port traffic was also declining quite substantially, and that at 150%, 145% tariffs on Chinese goods, you're going to really shut down trade with China. So things are looking fairly grim on that front. Going down to 30% is a lot more manageable, and with a 90-day truce, there's room for there to be negotiations going forward. So it's quite a big relief on the U.S.-China front.
Okay, so Washington said that there are more talks ahead. What will you be watching closely as those discussions get underway?
I think it's unreasonable to expect there to be a grand free trade agreement to be negotiated in 90 days, but we could see some improvements or some positive announcements. It could be buying of agricultural goods like we saw in phase one all the way back in 2018-2019 period. We could see agreements on some issues that are outstanding on the trading relationship. There's a lot of small things that could be announced, but I think what we'd want to look for more substantively is a meeting between senior officials again, maybe a meeting between Xi and Trump at a major international gathering, like an APEC summit or something like that. And at those meetings, we could see the announcement of a grander trade agreement or some sort of truce. So something substantive in terms of what they can agree to that would result in a continuation of this truce beyond the 90 days. Okay,
so we've seen the reaction in the stock market, but the bond market is also reacting. What are you making of the moves that we've seen in yields so far?
Yeah, so yields have moved higher on the day, and I think that makes sense because what's happened with this truce is that it removed the economic left tail, the really bad outcomes. So that decoupling of trade with China, the issues that I talked about of logistics managers or supply chain managers we're talking about, if that's taken off the table, we remove that very deep recession outcome that could have taken place if things stayed bad. So that means recession odds are lower, growth expectations are higher, that tends to be bad for bonds, and that's why rates are moving higher. So that's the predominant reason why we see higher rates today.
So you mentioned rates are moving higher. The U.S. might avoid a recession. So if that sentiment takes hold, what does that mean for markets going forward?
Yeah, so markets are going to see this positively, and they're going to look forward, and they're going to hope that we get trade agreements with other countries. So if the U.S. is willing to have a truce at 30% on China, what does that mean for EU, for Canada, for Japan, for Korea? That doesn't mean that things will necessarily go well for other countries, but you'd think, given our starting place and the rhetoric against China, that if the U.S. is being willing to be more conciliatory and negotiate, other countries in the markets are going to look forward to hopefully seeing more reductions across the board. Will that take place? I mean, it's really hard to say. I think everyone's been caught off guard by the trade war this way and that way, but I expect to see a lot more trade headlines as we go forward, and we still have deals outstanding with potentially with the EU, Japan, Korea, and Canada, as well as Mexico. So some big countries are still out there, and the market's going to want to be looking forward to what might take place there.
Okay, now we've seen volatile markets moves in both directions over the last few weeks. What should investors keep in mind when we see big swings back and forth like this, like today?
Yeah, I mean, if you look at U.S. equities, we're back to nearly levels where we were on April 2nd, like around Liberation Day, and volatility has fallen very substantially as well since it spiked in the immediate aftermath. So what I would say for investors is that it's really important to stick to your long-term plan, whatever that may be, and make sure that you don't get whipsawed by these headlines. We've seen crazy headlines either direction, and that's begot crazy market movements, and you don't want to be trading around your portfolio and getting caught offside by that, because that will really set you back. And I think one thing worth noting too is it's worth reflecting on your risk tolerance. If you went through the Liberation Day episode and were unable to sleep, maybe you're taking on a little bit too much risk. So it's a good opportunity to kind of reset, take a deep breath, and really think about how your portfolio should be positioned. and noting that, hey, we're not out of the woods, right? There's still going to be a lot of noise from
There's still a lot of
administration.
uncertainty despite the news today.
And there's a lot of policy mix that we're going to see. This is just trade, but we're going to see things happen on the deficit and budget bill very soon, coming up in August. We have immigration, we have deregulation. There's so many headlines that we're going to see across the board. So it's important to build a portfolio that will help you sleep well at night.